on Bitcoin as we get ready for the SEC's approval of a spot Bitcoin ETF. We think it is going to happen. There are all kinds of signals that it's going to happen.
Invest the time and the money.
So important in this conversation around spot Bitcoin ETFs coming to market.
How high could BTC's price go when the spot ETFs are approved?
But also to protect you against fraud and manipulation.
SEC staff engaging with issuers, of a number of which have filed for spot ETFs.
Cathie Wood gives us an update on the pending Bitcoin ETF approvals, which could be as early as January 8th. However, even if the SEC grants approval by January 8th, there could be a delay of more than a month before the actual launch. The potential obstacle to the spot Bitcoin ETF approval may lie in Gary Gensler's political ambitions. Despite Gensler's in-depth knowledge of Bitcoin as the SEC chair, it's puzzling to find a logical reason for his reluctance to support a spot ETF. ARK Invest CEO Cathie Wood highlights the decentralized and transparent nature of the Bitcoin network, making manipulation highly unlikely. Let's get right into the interview with Cathie Wood. Don't forget to hit the like button and subscribe if you enjoy the content we do here on this channel.
The last chart here is just a performance chart, year-to-date returns, and just wanted to show you where Bitcoin is. It's been the best performing asset this year. And you can see where other categories of equities and fixed income have been. It's been a pretty good year overall. Bitcoin having an especially good year. And I think it's because in March we learned that Bitcoin is not just a risk-on asset. It is a risk-off asset. And why is it a risk-off asset? It's a risk-off asset because there's no counterparty risk. When everyone was worried about their deposits in the banking system in March, they were worried because of counterparty risk. Banks are opaque, whereas the Bitcoin blockchain is transparent. And it's decentralized, where banks tend to be centralized. So a huge proof of concept. So this realization, wait a minute, Bitcoin is a risk-on asset and a risk-off asset? That's crazy. We don't have too many of those. So pretty interesting. In terms of the sectors that have done well this year, I was surprised. As you know, we are index agnostic. And we think that sectors are converging because technology is blurring the lines between and among them. But if you use the GICS classification, you'll see real estate this is in the last month, real estate, industrials, and financials have been the best three categories. The reason I was surprised by that is it was a very good period for innovation-based strategies like ours, which are index agnostic. That typically isn't the case when real estate, industrials, and financials are the best performing categories. Worst were energy, it was the only negative sector, consumer staples, and healthcare. So those last two are more defensive categories. That does make sense in the context of how innovation-based strategies like ours performed. So it's been a great rebound from the lows in October, just a massive rebound, and has transformed the year for a lot of asset managers, either for the better or for the worse. And if we're right, and inflation is going to surprise on the low side of expectations, and growth disappoints, will be in a period where innovation does its best. Innovation solves problems. If you need to protect your margins as your pricing power disappears, then you need productivity enhancing technology. And with the breakthroughs in artificial intelligence, and we marvel all the time about the breakthroughs in AI as AI training costs drop 70% per year. There's a boom out there, and that is what happens when prices drop. And prices associated with disruptive new technologies always fall. So it's a perfect environment for our companies to thrive. And I'll close right now by featuring two pieces we've put out recently. Both of them, interestingly, are on Bitcoin as we get ready for hopefully the SEC's approval of a spot Bitcoin ETF. We think it is going to happen. There are all kinds of signals that it's going to happen.
Cathie Wood also discusses the widespread anticipation of the Bitcoin ETF with investors, emphasizing the importance of digital wallets, as well as blockchain networks like Solana. The crypto community eagerly awaits further developments, as these analyses and the SEC decision on the Bitcoin ETF are likely to have significant impacts on the market's direction in the days and weeks ahead.
A chart showing what expectations have been for fourth quarter GDP growth ever since October. And you can see in the GDP now purple line there, that growth expectations have been coming down. Bloomberg expectations were very low and seem to have come up, but they're both converging into sort of the 1 to 1.25 range, which is very low, of course, and not too far from negative, which is where we would not be surprised to see real GDP growth go some point next year. Now, we got consumer sentiment measures today. You can see, just going back into the early 80s, you can see that consumer sentiment is quite depressed by historical standards. We did get a little bit of a pop today. We've been hovering in that 60 to 70 range, got closer to 70 with today's reading for this reason. Expected inflation rates. So you can see that if you look at the 5-year, the longer-term inflation expectations as shown by the green line, they never really veered from where they've been since 2000, which was a disinflationary time. It was those short-term, the next year expectations that popped above 5%, which is not terribly unusual. The same thing happened as the Fed was stimulating in 2008. And then, of course, they came right back down. They're coming down again now. We had an unusually large decline. It had popped to something over 4%, and now we're back down to the low 3%. And you can see, again, that's not too far from where we have been. And yet the Fed has been fighting this inflation dragon. You'd think that expectations were where they were in 1980 and had been building for 15 years. We got to 10% inflation expectations then. We got nowhere near that, and yet the Fed, with a 24-fold increase in interest rates from 0.25 to 5.5% in little more than a year's time, has been slaying a dragon. We don't think that dragon existed, and we do think we'll see the ramifications of this policy during the next year or so in the form of much weaker than expected inflation and economic statistics. We wouldn't be surprised to see the broad-based inflation gauges go negative. And then, of course, the Fed will be fighting a completely different battle. Here is temporary help employment. You can see it's a leading indicator. The green line is total employment. Temporary help is the purple line. And by this time in past cycles, the total employment was about to turn down when temporary help had reached this kind of a decline. And we do think that will happen next year. That's part of why we think consumption will pull back.
Cathie Wood points out, with real money now flowing in, she emphasizes that the crypto market has become more significant than ever. Institutional investors are driving the price of cryptocurrency, which will yield massive gains in the next 3 months. Wood believes this will underscore Bitcoin's enduring relevance as an asset and as a hedge against currency devaluation. She anticipates that BTC will continue its parabolic run right into the halving of 2024. Cathie Wood's main focal points this year has also been the movement in crypto legislation in the House, signaling the growing interest in the crypto space. Although crypto legislation might face challenges due to political opposition, Wood advises the company in which she invests to spend heavily now in order to take advantage of huge growth potential. She estimates that ARK's concentration on technology advancement is worth about $7 to $8 trillion, or less than 10% of global equities markets. Emerging markets are relying on digital currency, and Cathie believes that based on the current market outlook, decentralized finance will take over and usurp the roles of most financial services companies. Today, they'll be able to offer lower rates to savers and higher rates to borrowers. What do you think of Cathie Wood's interview on the current financial market? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.